All right, we're trading three of today's movers in today's three-stock lunch. Carnival shares lower after the company announced it would offer $1 billion in convertible debt. Micron says it's cutting chip production as demand falters. Amazon starting to do some cost cutting with layoffs in its devices and services unit. Let's trade these three names with our friend Lee Munson. He's the president and CIO of Portfolio Wealth Advisors. Let's start, shall we, Lee, with Carnival. What do you see there?
I see this as sort of a religious stock because it's the proxy for hope that it's all going to be okay in the future. This company had one of the largest secondary offerings in equity this summer at over $1 billion, and everybody else wants to buy back stock. Now they're issuing another $1 billion in debt, convertible or not. This is not good. Why do they have to do this now? Because things are not getting back. Remember, this stock is diluted 86% since the beginning of this pandemic. So every share you have is a much smaller claim on future earnings that I'm not seeing. So if you are smart enough to do the hope trade earlier in October, you've made a ton of money on this stock. Let me give you a tip. Trade it because it doesn't have a bright future.
All right. Up next.
Okay.
Some strong words right there. Micron.
Oh, God, this chart looks like Carnival as well. So here's a problem with Micron. They make a lot of this thing called DRAM memory, which is sort of, it's kind of like Dramamine. It puts you to sleep. They put it in computers. Just ask Intel how that market's been going in the last 20 years. And so they're really making commodities. Samsung's having the same problem. All the big players selling DRAM are having the same problem. And so the idea is that, they're going to slow down, cut production by 20%. And then the thought is next year when things get all better, they're going to be able to raise prices. I don't think that's going to happen. They can't slow it down as much as you think. If you want to lay up on Micron, you wait till you can buy it at 0.7, 0.8 of book value. Right now it's 0.3. So again, if you bought it a month ago, why don't you trade it? Wait for a lower price when it's a layup.
All right, let's move on to the last and, I guess, biggest name in this bunch. That would be Amazon.
Oh my God, I think it's okay to buy. Yes, Lee Munson said it's okay to buy Amazon today. I've owned this stock for a long time, and I've got clients who like to own a little bit of it. I love the layoffs. I'm not talking about the human damage, but we know that's coming. But here's what the other things that people don't realize. They closed down this like telehealth. They're closing down these unprofitable stores, which I never understood. They're not going to build as many warehouses as they said. And they're shutting down weird things like robots to deliver things. So I love all the other stuff that's not getting the headlines on what they're cutting, because we know that a year from now, all these cuts that they're doing, they're going to hit the bottom line in the form of more profits. So if you want to own a great company at an okay reasonable price, here's your shot.
What's okay and reasonable price when a forward PE is 86, Lee?
Well, let's not get into that because Amazon doesn't like to pay taxes. So you have to remember, they're always going to take all those earnings that they make and they're going to reinvest into the future. And I think that that's the one thing that's hard for value investors like me to get our minds around in Amazon.
All right, Lee, thank you very much. We'll see you soon. Lee Munson.
Thank you.